Okay, guys, so we have a very special guest today, Steve Barton, and he is the host of a channel called In It to Win It, a channel which I have been watching myself for many, many years. Steve has an opportunity to talk to some very special guests in around the commodities sector and overall economy. So I'm very happy to have him here today to talk about various things, including the commodities, stock market, economy. Thank you very much for being here, Steve.
Well, thank you for having me, Vlad. Pleasure's all on this side of the table.
Hmm. Thank you, Steve. So we'll start with the broad question of the economy. So what do you see is happening right now?
Well, generally speaking, global economy, governments around the world have kind of started an experiment on August 15th of 1971, and they got off the gold standard. And so that started this global experiment of the entire world being on a fake fiat currency, one that they could print each individual government into oblivion, and all of the currencies are basically based right now off of the US dollar. That's the reserve currency. I think that's slowly changing. I think that over time, whether that's in the next decade or so, I think we're going to see a new monetary system. I think that it might be kind of like a Bretton Woods moment, Um, the Scott Bessent, the Treasury Secretary, has alluded to that. He says that he wants to be a part of it. So I think in our lifetime, probably in the next 5 to 10 years, we're going to see some type of new monetary system. Um, so that's interesting. Basically, what that means is, we can only take the hand we're dealt. Here, I'm in the United States, so I'm a little more focused on U.S., and that's a little convenient because it is the world reserve currency. But I was a little disappointed with Doge. I thought that they might be a little more effective. Turned out they weren't. Trump promised to balance the budget and to decrease spending, and he's done the exact opposite. He's actually increased spending and increased the deficits. So the deficit was 2 trillion when he, took the flag, and now it's going to be 2.5 with his big beautiful bill. So as investors, we can only take the hand we're dealt. And I think the bet for that is basically to bet on real assets, real things, so things like land, things like precious metals, things like cash flowing real estate, so as inflation goes up, you simply increase the rent to keep up with the inflation, things like that. So I think generally, broad speaking, like that, I think in the environment that we're living through now, the bet is real assets, and I think that's how you can prosper from it.
Yeah, 100%. And especially if we consider the fact that politicians, in order to get elected, they need to promise things. So the deficits really by default always have to go up or they will not get elected. So by design, it's quite difficult for the current system to not be inflationary, right?
Yeah, and not only that, but they have to increase the money supply, or yeah, to keep the train running. They every dollar that exists is debt, and it's owed somewhere else. So you have to keep increasing the system, or it just doesn't work.
Yeah,
It'll collapse.
100%. And one of the biggest reasons why I'm so much into the commodity sector is because, so first of all, this inflationary system, but also because of the fact that the currency is, it's going to go up. The M2 supply is going to increase every single year, but the supply and demand looks very, very interesting because we're moving to this era where it's so much difficult for mines to get permitted. And because of that, there will always be this gap, at least for the next 10 to 15 years, between the supply and demand.
Yeah, so basically you're saying that you're asking basically is like the supply and demand, that's what's drawn you to commodities? Is that your question?
Yeah, 100%. And because of that, it's quite interesting that I suppose that's the main reason why there's such a big opportunity inside of the commodity sector is because the supply and demand, the gap is quite big. It takes such a long time for them to get all the permits from the moment where they actually find the material that they're looking for and to the production. And because we're moving to this world where the demand is so high for the hydro, the nuclear, the solar panels, the wind turbines, and all of that as well.
Yeah, that's one of the neat things about commodities is that they have a setup that's kind of like a squeeze, so you can have a supply of, we'll just say copper, sitting on the sidelines, but they're mining less copper than we're actually consuming as a planet each year. So eventually, once you wear through that supply, someone's going to get their copper and someone isn't. So we have several squeezes set up right now. We've got a squeeze coming in uranium. We are mining less than we're consuming every year. That's cool if you're a commodity investor. We also have a squeeze coming in copper. We're mining less copper than we're consuming as a planet, and especially when you take into account countries like Africa, when you take into account these developing countries like India. They want to be where the UK and the United States are right now. They want to just walk into a room and turn on the light and not have to worry about intermittent power. You're not going to do that without copper, and we don't have enough of it. So there's a squeeze coming in that. When that happens, I don't know, but there will be a squeeze. And I think there's a squeeze coming in silver. Although I don't believe that that demand is necessarily going to come from the industrial side. Maybe we'll see a huge ramp up in solar panels. That could be it. But the squeezes that have happened before in silver have been from the precious metal side, from the monetary side. And I think it's going to take that real fear, when people realize that. When I talk to everyday people and tell them about inflation, I'm like, the prices are not coming down. This is the new price of groceries. They're only going up from here. They're just not going up quite as fast as they were during COVID. So, I think that eventually that will weed its way into average everyday people, and we'll get another squeeze just like we did in 1980 with silver and just like we did in 2011 in silver. I think another one of those is coming now. If that's in the next month or 10 years, I have no idea. But, that's one nice thing about commodities is that they have that supply demand dynamic that you're talking about, which leads to an eventual squeeze, and that's where you can really make your money. You just got to be the contrarian and buy into it before everyone else, and then sell it to the masses when they're riding that wave, and then you move on to the next one.
Yeah, exactly. And also with the inflation thing, because there's the difference between supply and demand, by default, in order for that to be fixed, the price has to go up. So that's going to fuel the inflation even more. Even though, let's say, we all go into mining and the countries actually put the money inside of those sectors, which will be quite good for us, of course, as from the investing perspective. But overall, that's going to increase the prices because that's the only way we can get more production, right?
Yes, yeah. I suppose when I look at inflation, I look at it as more as like maybe kind of like from a big picture view is I guess M2 might be the metric I would use is like, what is the actual supply of dollars? And you may have increased prices in one area, but if you don't have an increase in the currency supply, then you don't really like have inflation. But I can see kind of isolated inflation like that in individual sectors or commodities.
Yeah, yeah. And Steve, for you, what is your main investment opportunity now? So, of course, for the long term, copper looks very promising. I suppose they all look promising for the long term. But for, let's say, if you're talking about 12 to 24 months, what would you be really focused on right now?
12 to 24 months. Okay, I'll share my chart here and then we can take a look. Now, everyone's talking about gold right now. This is the gold chart, and I think it's simply because gold is just like screaming at all-time highs. Okay, I like gold over the next 12 to 24 months, but it's a lot harder for me to buy on this end of the chart than it is like when it's down here. You know what I mean? I also think silver could have an opportunity like that. I think 12 to 24 months. Copper is going to be delayed a little bit by the recession, I think. Although we are almost at all-time highs now on copper. I would say uranium, I like a lot over the next 12 to 24 months. I
Me
think we're
too.
going to get, if I pull up the uranium chart here, we had a nice little squeeze right here on the spot price of uranium recently where we sold most of it. And then now we're getting interested again because it's getting down cheap. This is basically the floor right here, I think, in uranium. And the spot price, we'll just call it around like 65 bucks or so. So I'd be interested in uranium again. I think that uranium is probably going to do, one of, let me find my little drawing tool here. I think it's probably going to do like one of these. We'll have another spike up, and then another one down, and then another spike up, and then this will eventually go parabolic to where, some utilities get their fuel and some don't. That's the beauty of these commodities. They'll have a squeeze like that, and you can really make a pile of money in a very short period of time. So I like uranium. I also like oil. I think that oil is, generally speaking, down here in the buy zone. Talking to Rick Rule, he's told me that basically $60 oil is unsustainable, which is pretty much where we're at now. Today we're sitting just south of 65. And these companies, they're buying back their dividends, or they're buying back their shares, and they're issuing dividends. So in other words, as long as you own shares in these things, the price, or the size of the piece of pie that you have is getting bigger. You know what I mean? As they buy back those shares, there's fewer shares available, so each one of them becomes worth a little more. And they're still paying their dividends, and these companies like Exxon and Chevron, they've been issuing dividends for decades, and every year the dividend amount goes up. So I like oil a lot for a little bit of a longer term bet, probably 3 to 5 years at least. This may be one of those that you just hold for the rest of your life, and then the dividends from these companies pay for your retirement. I like coal. When we look at coal here, I'm really uninterested. This is where I like to sell, and this is where I like to buy. So I'm becoming much more interested in coal. This is thermal coal. So this is basically electrical demand for third world countries, which is only going to go up.
Yeah.
India wants, like I said, India wants to walk in the room, turn on the lights, and not have to worry about intermittent power. Met coal, I'm a little less bullish on. This is for making steel going into a recession. I don't think this will do as well. And then platinum and palladium, I think those could have a nice little re-rating. We've had a nice bump here in platinum over the last, I don't know, week or so. Nearest I could find it was because China was buying it for jewelry demand. I don't know. I'm having a platinum expert on the show soon, but I like platinum and palladium a lot, around $900. From what I can tell, these miners, their cost for mining this, the production cost is about $1,200 an ounce.
Yeah.
So that's about where we are now. I mean, I like platinum and palladium a lot. I also like nickel. I think nickel is down in the toilet. I think this could have a serious re-rating, although I don't know when. I have no idea when. So, if I had to put them in order, I'd probably say oil first, maybe PGMs, platinum second, and probably coal and nickel might be tied for third.
Okay, cool. Yeah, I'm very fascinated by uranium at the current levels as well, because the cost of production is around 65 to 70 right now. And so we can see the countries, I think China they've planned 50 reactors officially by 2050. I think it's quite way more as well. And I think there's 440 reactors currently operating. I think there's like 40 million pounds deficit, if I'm not wrong. So yeah, uranium at the current levels. I mean, I was buying at 90, so I'm very happy to buy now as well. Over the long term, I feel like it's an absolute no-brainer. And the actual stocks, like Denison Mines, they underperformed a lot, but yeah, there's some very good companies as well in that sector. And then, as you have said, with oil, I mean, I am a little bit worried about potential recession, the big beautiful bill. We don't really know what's that going to do and what's going to happen overall. But yeah, I think there's a huge opportunity in the commodity sector if you're patient, of course, because we all know that you can buy a stock which is doing perfectly fine, and then a few months later it's down to 50%. And it's about, are you able to stay calm in those situations? Because I know some people who I would not recommend to buy because they're very emotional and they would not be able to stay in it. So I think this sector is not for everyone. You have to be mentally strong to be in it.
Yeah, I guess you basically just have to recognize, if you're a contrarian, you're buying when everyone else is selling, and then you're selling when everyone else is buying. And if, sometimes you're standing in a room alone and everyone is telling you that you're wrong, it's not always easy to click the buy button then, but that's what you got to do, especially in this sector.
100%. And that's like the best opportunity would be to find the difference between the price and value and buying when the difference ideally is the biggest, because that's when you can make the most amount of money. But usually that's difficult to do as well because everyone thinks that, well, that's wrong and everyone's buying Tesla or Bitcoin.
Yeah. My brother put it best when he said basically, like, I'll share my screen again here, is he's like, the kindergarten method is sell here and buy here. And if you're looking at a chart like gold now, is up here, it's really tough for me to buy that. It was really easy for me to buy it when it was, $1,600. It had a nice little triple bottom, you know what I mean? Like this is a quick, easy way. This is nickel, but it's a quick, easy way to tell if something is relatively cheap or relatively expensive.
Yeah, 100%. So Steve, we have a lot of young audience on this channel as well. And, you know, I feel it's a great way for them to learn, something except the main stock market, the Teslas and the Bitcoins, because if you're able to, stay calm and identify opportunities like this, then it's going to be quite easy for you to achieve success over the long term. And recently seen this example, if you smoke and if you spend like $25 a month or a week, and people spend more than that, well, if you instead of that would invest that money absolutely passively, S&P 500, no education, over the 30 years, that's going to be like 220K just by doing absolutely nothing and removing one bad habit from your life. So over the long term, it's quite easy to build wealth if you have certain rules and if you can stay consistent. So what advice would you have for this new generation where, they maybe could be focused on the Bitcoin, they want to make 100x in a week and that kind of stuff?
Yeah, that's interesting. Yeah, okay, so I would say that number one is start now, and so just start. And like you said, set aside. And instead of thinking of a dollar amount, I would probably go on a percentage of your monthly income. So if I would say the minimum is set aside 10% of your monthly income into investments. I do more than that. I do 25, sometimes more, depending on how good the month is. But set aside a set percentage of your monthly income to put into investments. I started when I was 14 and I could retire now. I really like working, but because I started so early and I consistently did that and compounded interest over time has really paid off later on into my life. So start early, start now, and start with a set percentage. As far as what to invest it in, I would say focus on what really interests you. For me, when I was younger, I started with real estate, and that has paid off really well because now I basically just collect rent, and the properties are paid off. I don't have to do anything for it. It just I just get a check every month in the mail. So that's pretty cool. Another one I would say is start with hard assets, real money. So precious metals are a great place to start, and you guys know Vlad is really into that, so that's a good mentor there. And I would also say look into, after you've kind of explored those, and after you have a set percentage of your net worth or of your monthly income that you're setting aside, I would look into where you live and what are some tax advantaged accounts or investments that you could make where you have to pay your government as little as humanly possible. So, for example, in the United States, we have what's called a Roth IRA, and we are taxed up front on the money that we put into that Roth IRA. But then after that, everything that we make out of that account is ours, and we don't have to pay the government. So that makes it a really nice account to take some high risk plays in stocks that could double, and find out what that is for your country where you are. And as far as I'm aware, most countries have some type of tax advantage account, retirement account like that. I would participate in that. Yeah, that's where I would start. I would start with real assets. I would start now and set aside a percentage of your monthly income to go into that. I would really look at cash flowing real estate. I think that's a great place to start. And maybe that starts with just setting aside that as savings in the form of precious metals. Then when you have enough to actually purchase that rental property, you change it into fiat of whatever country you're in for a hot minute, buy the place, and then now reset your savings and move it on to something else. I don't know. But that'd be my advice. Number one, start now.
Cool. Thanks for that, Steve. Yeah, I 100% agree with that. And also, I like to have at least 12 months of savings because I feel like it makes you feel much more comfortable no matter what happens. Like if you lose your job or if you have a conflict with your boss, you will make more rational decisions over the long term if you have that safety behind you as well. And then even when I trade, I only trade in the sectors that I understand. So I would only trade in the commodity sector because I feel like you understand the overall dynamics. You know what's high, you know what's low, and you get that sort of good feeling about what if this price is it high, is it low, where it's going to go. Of course, you want to look at the charts, build a lot of parameters. I sort of use the stack approach to increase the probabilities of being wrong. But yeah, I'm a big proponent of you either invest passively if you don't know what you're doing, but you want to get involved, or you really study a certain niche, a certain sector, because then if you get competent on it, that's going to be there with you for the rest of your life.
That's a really good point. I forgot to mention that. Yeah, have a minimum 6 months, preferably a year or longer of cash, or that could be precious metals, to where if, like you said, if you lose your job, you're not you're not scrambling. You know what I mean? Like you can live for a year or so without having any income.
Yeah. And do you still get involved at all with the general stock market, or do you also only focus on the commodity sector as well?
No, I used to be in the general stock market. Yeah, but I just see the biggest opportunity right now in commodities. Maybe 5 years from now, when gold's at 10,000 and oil's at 150 or something, I'll be like, hey, the Dow to gold ratio is down at 1 to 1. Time to sell your gold and buy the Dow. Yeah, no, I'm not opposed at all to being in the general market. I just see the biggest opportunity right now in commodities.
Yeah, me too. And the ratio chart is a great tool that I feel a lot of people, especially at the start of their career, don't really look at too much because basically with using ratios, you can compare every single asset, look at the historical charts, and that's what tells you if one asset it basically tells you what you can rotate your money into, like from one sector into another. And that's what I'm gonna do with silver. So I'm big into silver. I do own some gold as well, but right now I believe if you look at the ratio of gold to silver, it's close to 100, where historically it's been around 50 to 1. So by just looking at the ratio, that could sort of tell us when to swap one asset for another as well. I think it's very underlooked tool, I suppose, as well.
Yeah, I could pull up a couple of ratio charts here that will basically emphasize your point. So here's the Dow to gold right now, and basically when the chart is up here, then the Dow is expensive and gold is cheap. And then when the lower it goes down here, then the um, basically, as this chart goes down and down, we're going to want to trade our gold for the Dow, right? And
Yeah,
real easy visual representation of that. You know what I mean? And
exactly.
here's another ratio chart: is gold divided by the S&P 500. We can see how
Yeah.
crazy some of the ratios have gotten here. We're way down here at this end of the chart, so this would emphasize that that gold is relatively cheap compared to the S&P 500. Here's the one that you were just talking about, gold divided by silver. And if we zoom out on this on the monthly chart here, we can see that the 100 or so, I'll just put a line right here. So that's 100 ounces of silver equals 1 ounce of gold. And we're up at the upper end of this chart. So what you're saying is that silver is relatively cheap compared to gold, and I would agree. I think once you kind of get down into here, into the 40 or 50 or so, that might be the opposite. Maybe you should be putting more of your money into gold than to silver. But right now, I think silver is relatively cheap. We had a neat little correction down here in just the last couple of days in silver. This was kind of creating like a little, like kind of a wedge pattern
Yeah,
right
okay.
here that ironically, maybe I'm essing on my own point, but most of the time when you get a pattern like this, the flatter line is the one that's going to break out to the top, but it did exactly the opposite. It broke down here to the bottom. So anyone that was betting more on silver right here is extremely happy in the last couple of days. So yeah, I agree. If this gets down into the I don't know. I'll probably start trimming around 75, 60, somewhere around in there, and
Yeah.
maybe trading some silver for gold. Some other ratios that I think are really cool right now And extreme would be platinum divided by silver. And I'll go out to the monthly so we can emphasize the point here. So this is going back to the mid 80s. And the ratio here is basically as the chart goes up, then platinum is expensive in relation to silver. And as the chart goes down, platinum is cheap compared to silver. So we can see right now that you can basically trade a kilo or 32.4 ounces of silver will get you 1 ounce of platinum. And same thing for platinum divided by gold right here. I mean, like, you know, historically, the average is at least parity. It's probably closer to 1.5. But right now, you can get down here, basically trade 3 platinum coins for 1 gold coin. And there's been moments where it's been kind of the opposite. So I think there's a real opportunity here, just, you know, like you said in the ratio charts, where you can take advantage of different commodities that are cheap compared to one another. Try not to think of them in terms of dollars, you know, or whatever your currency is. Think of them in relation to one another.
Yeah, 100%. And that's why the overall precious metal sector is so interesting, because during periods of deglobalization, which is something that we're having now with China, Russia doing their own thing, governments always want to, you know, have some safe haven. So they increase their gold as an amount of their storage of their actual country's wealth. And so, and similarly with platinum, we have 3 countries really that have most of the supply. So if something happens with them, or if Trump and Putin don't really agree on something, there could be a huge spike for platinum just because of that. If the border closed, and then there could be huge opportunity there as well.
If mainly, I mean, South Africa is the biggest one. So if there's a hiccup there, which I think could be maybe not likely, but it's certainly possible, their political situation isn't that great. Their power supply isn't that great. Their power grid, you know, a lot of it's solar and intermittent power. So that's not really easy to run a mine in an environment like that. So that's your number 1 contributor. Number 2 is Russia. We stole a bunch of their wealth and their treasuries. I don't think they're too hot on us. So that's a hotbed. And then Zimbabwe. I don't think I have to tell anybody here what kind of risk comes with that country. So with those 3 countries is where 85% of the world's platinum supply is coming from. You know, all you need is a hiccup in any one of those, and I think those ratios will radically revalue, and very quickly. And, you know, that's another thing too. A lot of these are burning matches, and you're waiting on that squeeze to happen. And when it happens, you have to pay yourself. You know, you got to take profits. Just like we saw in uranium a year ago, you know, it went from $55 a pound up to 108. Take some money off the table. You know what I mean? Like you were right. Pay yourself. You know,
Yeah.
But yeah, I agree. I think something like that will happen and is coming for platinum. I just have no idea when.
Yeah. That's all the questions I had, Steve. Thank you very much for being here. Everyone should go to a channel called In It to Win It. Steve is a host there. It's really, really good. I have been watching for many years. He hosts some best minds in the commodity sector. So I highly recommend it. And again, thank you very much, Steve, for being here.
Yeah, thank you. Yeah, if anyone wants to check it out, just go to stevebartonmoney.com, and you can sign up for a free newsletter there. I put one out every week. And like Vlad said, I just interview a lot of guys in the commodity resource space, and they basically tell us like what companies and what commodities we should be focusing on. And then I pull up the charts and try to find cheap entry points into that and basically sell it when I think it's expensive. And I show you weekly like where my buy and sell zones are, and you can play along. It's a lot of fun.
100%, guys. I highly recommend it. Tons and tons of value there, especially if you're starting out. It's really, really good.
Thank you, Vlad. Thank you for having me.
Thank you, Steve. Thank you.